the Fed's path forward here. The central bank is expected to lower interest rates in September as inflation moderates and the job market sees signs of cooling. So, how should you be positioning your portfolio ahead of rate cuts? Here to weigh in studio, we've got Tom Hayes. He's the Great Hill Capital Chairman and Managing Member here. Great to have you here with us in studio. So first and foremost, what type of pivot should investors be positioning for, especially going into this first potential cut here come September, as we're all expecting?
Well, I think, Brad, we've got some seasonality factors at play. In an election year since 1955, we generally have pretty good strength into early September, into mid-September. And then as we get closer to the election, we get a little volatility, late September, October. That happens to coincide with the first cut mid-September. And historically, the first 2-3 weeks after the first cut tends to be a little bit weaker. So you have the headwinds. So I think you dance while the music's playing right now. I think we're going to get probably some new highs we saw in the Dow yesterday. We'll see what happens with Nvidia tomorrow. Maybe the S&P and the Nasdaq will catch up a little bit. And then I think as you look at all those profits and you're smiling so wide, you could eat a banana sideways. In early September, you say, wait a second, cuts coming, election volatility's coming, and maybe harvest a few profits, have a little cash on the sidelines late October, deploy into year-end rally.
You know, it's really interesting because I hesitate to ever cast any doubt on Nvidia, especially in this day and age and in this market right now and in the performance that they've exhibited. But those Nvidia earnings are going to be out Wednesday. That report itself, if it is a dud, then what does that signal for the back half of this year?
Well, initially, because of the weight, 6%, 7%, depending on the index, initially you'll get some weakness. But what we have seen since we got some clarity that the Fed's going to be cutting is a regime change that started in July, was temporarily impaired by the yen carry trade unwind for a minute until BOJ relented and they say, wait, we'll wait to raise rates until the Fed actually starts cutting so we don't get the liquidity mismatch. So I think the focus is the shift is going to be from large caps to small caps. Large caps underperform small caps in the first 12 months after a cut by 11%. So small caps outperform by 11%. And that's also consistent with earnings growth. So this year, small caps are expected to grow earnings at 7%. Next year, 37%. And Mag 7 earnings growth decelerates from 30% this year down to 18% next year. So if Nvidia does less well than people think, I think you're going to start to see a lot of the stocks under the surface start to pick up the slack. So even if Mag 7 underperforms, you can make a tremendous amount of money under the surface.
Just to put a fine point on this as well here, I mean, the information technology sector, and according to some data from FactSet, information technology is reporting the second highest year-over-year earnings growth rate of all 11 sectors at 18.9% right now. And Nvidia is the largest contributor to year-over-year growth right now. So for investors trying to figure out whether or not, even given the run-up that we've seen in Nvidia, this is still a ripe investment opportunity, what would you say to them?
Okay, it's nuanced. I think the earnings are going to be okay tomorrow. The reason is we saw all the hyperscalers were spending like crazy. That's why their margins are going down. The magnificent margins are going down. Earnings growth is going down because they're giving all the money to Nvidia. I think there's going to come a time where investors say, where's the return on our investment? That's 2 quarters out. But right now, Nvidia is priced for perfection. $3.2 trillion valuation. Our entire GDP is $28 trillion. So you're saying it's worth 11% of our total GDP? Like, trees don't grow to the sky. It can grow a little higher, but you have to keep in mind 28 times sales is pretty rich, 37 times earnings is pretty rich. Yes, you'd say the earnings growth is 38% long-term growth, but then you look at the numbers and it just doesn't make sense because the rule of 72, is it really going to double every 2 years? Sure. That would imply it's going to be half a GDP before we know it. It doesn't make a lot of sense.
All right, while we have you here, just lastly, because there are a lot of people who are trying to figure this one out, and you have some thoughts on it as well. Boeing has a windy road of challenges that we've seen over the course of this year. The stock is down, 33% year to date. I think we have a chart we can toss up for the viewers at home. Do you see this as a buying opportunity?
I think it's phenomenal. Kelly Ortberg came from Rockwell Collins. When he got involved with Rockwell Collins, it was a $7 billion company. 6 years later, he sold it for $30 billion, 4.5 bagger. This guy knows how to run business. The second thing is he's actually an engineer. So for the first time in a while, we get to have Boeing run by an actual engineer versus a salesman, which is helpful when you want to keep doors on planes and keep fuselages together and all that stuff that's important. But the key thing is it operates in a duopoly. Okay, so at the end of the day, you can say, I don't like Boeing. They've been sloppy the last few years. Okay, well, get online at Airbus and you can wait 20 years for your next plane. They've got 6,000 plus backlog. They just said, oh, by the way, we underestimated the demand because China's flying is picking up. The middle class is growing. They're going to need another 8,000 planes. So what you like to see with stocks that have relentless, everyday bad news is that they stop going down. And that's happened to Boeing in the last few weeks. Headlines have been bad every single day and the stock stopped going down.
NASA saying that they're going to use SpaceX.
It couldn't get any worse. Like you couldn't make this stuff up. Every single day they screw something up and the stock has stopped going down, which tells you that most of the problems are in the rearview mirror. Kelly Ortberg is going to turn around this ship. The duopoly is in place. The backlog of over a decade is in place. So we like this as a high quality business that's temporarily impaired.
Yeah, I should just clarify as well for those who are viewing as well, and the full story on the NASA's astronauts. They used Boeing and the Starliner to get them up there to the ISS, and now we're trying to get them back, and they're going to SpaceX for that. Anyway, all these things considered, still a Boeing story. Tom, you're still great. Great Hill Capital Chairman and Managing Member Tom Hayes. Great to see you.
Thanks so much. Appreciate it.